What's going on, YouTube? How y'all doing tonight? This is your boy Lightbearer coming at y'all at FireNation Radio. I hope y'all having a good night tonight because we trying to bring it to y'all. I swear we about to bring some goodness to you. We're right now. When you think about everything that's going on in the news, when you think about everything that's going on with the money, when you think about everything that's going on in the internet, we going to be talking about it. So right now, we're going to be talking to you about what's going on with AMD and why and how they partnered up with MetaVerse, and they're going to be bringing to you the new way of being, the new world order in a way. You know, we're going to go ahead and tinfoil hat that real quick. And then we're going to be talking to y'all mostly. We want to bring to y'all about some things when it comes down to the aspect of the beginnings of trading, making your trades, or not even making your trades, but actually looking and starting and beginning your journey on trading. So we'll be talking about the basics of what it is to look into the aspects of learning how to trade, but more on the basics of stock. And yeah, I'm trying to make this up as I go because my music just messed up on me, but we're going to get back into this real quick. And lastly, I want to introduce everybody. So I got Mr. The Business PK coming with us real quick. We got, again, your boy Jacques Curtis with the business tip. Again, we bringing business people to y'all. We ain't bringing just regular people. And then we got Nina Simone. Now, this person in particular, she's bringing another aspect. Last time we had a club from a person who's actually developing a actual club within the city, but this person here, their child development. So all the things that they see when it comes down to the aspect of looking at children and the effects that's going on in today's world, that's what she pays attention to. We're going to be talking about a little bit of that as well. And then you know how we usually do. We pop all this off with a little bit of talking about dating. Let me stop. All right. So we're going to start this off with everybody introducing themselves. Why don't you go ahead, Mr. Business, and tell everybody who we got on the line with us.
Hey there out there. PK the Business here because I always think about the business. If you're doing something and you're doing a lot about it, make some money. So I'm originally from Atlanta, Georgia. Moved on over here to the West Coast where the weather's always sunny. And just living it up.
All right. We got next. We want Nina Simone to come through real quick. Say hello, peace.
Hey, I'm Nina Simone. I'm 25. I'm a Cali girl. Like you said, majoring in child development. I know a little, but I'm an average, regular person.
She don't be bigging me up.
I drive a Tesla. Don't be gassing me up.
And then, okay. She ended that quickly. And then we got the man, Jacques Curtis, coming up in here. Now, the reason why I want to make sure that I kept Jacques Curtis for last is because this man here, you know what? I want to tout his stats in a way, but in a way, I want him to go ahead and speak for himself when it comes down to it. You know, Sigma, what is that again? Sigma 7 series? Go ahead and tell them about it. Sorry, please give us the info.
What would you? Yes, this is Jacques Curtis.
Sigma. Go ahead, man. I'm sorry.
What do you want to address?
It's not what I want to address. What I want to do is I want to make sure we set a precedent when it comes down to who we're talking to in here, because Mr. Curtis right now, I want to make sure that y'all understand what we're trying to establish, right? And what we're trying to make sure that we putting forth to y'all. Mr. Curtis is not only an entrepreneur and a businessman that's making his business from the ground up, grassroots, but it's more than just that. It's more than just the grassroots. It's more than just the actual aspect of building up his business. He's going to be actually coming together, making a hedge fund, building a bank. Who you know talk big money like this? So go ahead and I want you to talk your stuff. That's all I want to say.
Well, just a snapshot of where I come from. I spent 15 years on Wall Street, trading. Started out as a broker, then transitioned to a trader. Had my own trading firm, focused on currencies and commodities, short, intermediate trends, and broke off from that when the economic collapse and started a consulting firm. So that's where I'm at right now. I have a consulting firm where I streamline and automate companies' financial reporting process reengineering, and ERP implementation. And as you touched on in the beginning stages of putting together a global macro fund, and a bank is also in the short term coming up.
See, he didn't say I'm putting together a hedge fund. He said I'm putting together a global macro fund. I said mackerel. We talk about fish. No, but like, a global macro fund. Like, I want you to go into a little bit more detail about what that is, because what we're trying to do is we're trying to not only provide, entertainment for people, but actual real information. And when it comes down to that actual information, there's aspirations that could be achieved through seeing somebody who's doing some of the things that they're doing, like that we're doing actually. So when it comes down to like a guy like me, like, yeah, I went in military at first, but because of the situations that I was in the military, I've touched so much technology that the average person will never even see or touch in life, that I can talk about certain things going from robotics to engineering to light wave spectrums to, satellites. For me, I'm one of those people where I can actually do a great deal. So just explaining just the aspects of like, cybersecurity, how to, I don't want to say hack, wink, wink, into a system, like, but really just get into the grit of being able to do so much within electronics and technology that I want to be able to share a lot of this with people. So with that being said, we also got to share things that when it comes to like a higher level of let's say performance, we got to also share that with people so that they can see how to achieve it, what it is that they need to do to reach those great goals and stuff. And I feel that with you, Mr. Curtis, that is one of those places, and that's one of those things that we can pretty much display with just you explaining just your life and the things that you've been through. So give us a preview if you can.
You asked about a global macro strategy. So that it specifically is overall economic and political views. That's what the strategy is. Various countries and their macroeconomic principles. So fixed income, currencies, commodities, futures, distressed debt, which is real estate, which we're about to, we don't have to touch on really, but we're about to go through another real estate collapse. But
we definitely need to touch on that. We definitely need to touch on
special events. So all these special events create big swings in the markets, and you want to capitalize off of those big swings, and you want to be on the right side, whether it be long or short. Long meaning you're buying low, you're selling high. Short meaning you're profiting on the downside, something going down.
Mm-hmm. Now, when we speak about these basics, right now, I want to actually go into a situation of bringing it back to Mr. Business, right? So some of the things that has been really interesting as a recent is how you've been developing and learning how to trade stocks. So what are some of the things that you've been trying to learn as a recent when it comes to just the basics of how to find a stock? What are some of the things that you looked into to even like, scan? Because I heard that's a I'm trying to act ignorant of it, but I heard that's what you do. You scan the stocks in order to find what stocks are actually fit in the categories and the situations that you're looking for to be able to want to actually even be interested in buying. So what are some of the things that you're actually doing that you've been learning in order to get into that aspect. Now, hint, I don't know how to trade. I don't know how to trade. I just write programs that trade for me because I don't feel like sitting there like looking at that shit all that. I'm looking at it all that time. So excuse me. And so now what I want to do is I want to know the basics, because I feel like one of the things that I do is sometimes I jump over basics and learn some really, really advanced stuff because of my background, and then I have to come back down to learn the basics in order to actually support the advanced stuff that I've actually learned. So how do you, at this very moment, learn, one, how to trade, but two, how to actually bring it all together in order to find the stocks that you're interested in and make the profits that you've made as of recent? Because he's actually made some profits. I've been very proud of watching this man do what he do as he's doing what he's doing.
See, now he's hyping it up way too much. So I am maybe, let's see, when did we start looking at Weeble? So that's probably 3-4 months in. So I'm no way in any shape or form a expertise or having the expert mind of years and years of stock trading. This is more of a technical person using what the tools that we have available today to get the data that we need to make an informed decision on what stocks to pick. Now, starting off, it's just like I said, we're not financial advisors in any kind of way. So, take this as due diligence to research on your own. But what works for me, because, I'm also in the IT field, such as like Barrett, and what comes to mind.
Hold on one second.
Yeah.
Everything we say at this very moment and everything that we say after and before is all for educational use. So if you actually buy a stock, or if you actually invest in an ETF, or if you even look into one of these, REITs that we talk about, it is at your own risk. We are just a show. By the way, these are some of the REITs and some of the ETFs that you might be interested in. And if I go any faster than that, it will be Micro Machines. So back to you, sir.
Yeah, so for me, being the techno-minded person that I am, we have all these tools available. You usually use your Google Foo and just try to start off with the basics. Everything's to a degree.
Wait, he said Google Foo. We're going to have to stop you at that very moment. What is Google Foo?
Google's Foo is knowing how to use a search engine. Now, just because you type in a search, a specific amount of words or even a phrase does not always guarantee the hits that you're looking for. You have to either put things in quotes or put things with a quote and then with a hyphen in front of it so it doesn't look for that specific word, because you need to look at some, especially nowadays, there's so many words, so many names that all have similar sounds or naming conventions. You have to do a little filtering. So Google Foo is not just using the first page of results thinking that that's what you're looking for. You might have to deep dive and go back up a layer or back and forth. So when that comes to mind, to me, how I see the stocks, things are a pattern. For certain, like let's say the winter time is about to be coming up. Now, as living in the South, we get temperatures of 30 degrees sometimes. It's not enough for snow, because we only get that like maybe once or twice, but it's enough to shut down the whole city per se. So knowing that when the weather gets a little bit colder, people are going to get more sick. So what stock goes up? Usually is pharmaceuticals. Why? Because they're making the medicine. They're pushing these cold, these fever reducers, more in bulk and masses. Otherwise, usually people will get the flu shot, things like that. So things kind of have a certain pattern that go throughout the year for why certain businesses and industries go up. So take what just let's say we'll go basic. Pumpkins usually are on display at the grocery store around, let's say, late September, early October, all the way till maybe up till Thanksgiving. Now, any time of the year, we don't really buy any pumpkin stuff, so that's why when you see in bulk pumpkin everything at the grocery store, so if there was, like, say, Starbucks, if that goes up because more people are buying pumpkin spice lattes, or the medicine ball drink when it gets colder, things of that have a certain trend and pattern to it. Now, it's not an absolute, but we use that to kind of build a little base of analysts to research further into it. Does these companies that have any relationship to these products or services around certain time frames, do they go up? And that's called, I believe, called backtesting. So you would kind of use that as far as finding out what stocks to find, to trade in. So going on to that, a tool that I use is FinViz, and it's a little bit more technical minded. It's kind of showing its age because I think it was crafted in like the 90s or something. So it's not modernized as far as like the Apple experience that some people are used to. So because of that, it's a little bit cut and dry, and it's more for filtering. So if you subscribe to the premium elite membership, I think it's like $400 a year or something like that, or you can pay month to month, you can get real-time 10 seconds to a minute alerts depending on what kind of filters you put in place to show you results. So for what works for me, what I've been doing, just swing trading, and that was starting off like, what was it, $8 to 100, then 100 to 5.
Now
500 or something like that. But
it depends. It depends. Right there, like I started out with trying to go after the penny stocks. So I was definitely trying to do my golden gecko. But when it came down to it, though, yeah. So what I was setting it for was $10 up to about $50. I don't know how much he was going with because, like, his bank account is fatter than mine. But yeah, that was pretty much the price that I was looking at in between there.
Yeah, I was in the same field. I wasn't really looking up anything at 100 because I wanted to find the lower penny stocks, but more than $1 that could usually go up another $1 or $2. So I was pretty much looking for breakouts. So my filtering or indicators I was looking for, if the next day was about to hit, let's see, what was our rule? I'm going to go real technical on this one. The SMA 20 going over the 50. And if the price was going to go shoot above that, if it was going to cross or above it, and Wells had had over at least, I would say, 100,000 volume, because volume is the king. That's the way that, prices move up. It has to be high volume.
Now, what's funny? Okay, so I feel like we kind of did do a little bit of a quick little jump into the whole aspect of the of this universe in a way. So what are some of the things that you look for, like the basics? So right now we have FinViz up, right?
Yeah.
So some of the basic things that people should pay attention to. So right now at the bottom of the screen, at the lower third, you'll see some letters and some names. These letters that you're seeing, they're tickers. Well, these are the signs of some of the stocks that are out there that you could purchase. And if you look at the screen a little bit closer, you'll see some of these tickers are over here to the side. Now with FinViz, this is one of the little things that you can do where you can go straight over that ticker, that some of these that you see down there, look at the stock. This is for educational purposes only. Don't, if you're interested in any of the stocks, you bought them at your own cost. So anyway, so you're not going to be like, look, Wall Street Trapper said it. Look, I'm not telling you to buy anything. What I'm telling you to do is learn how to actually go to buy it. So anyway, Mr. Curtis, I want to bring you back into this situation, into this fold. I want to see how you look at this screen in comparison to the two rookies that are standing in front of you looking at the same screen, if you don't mind.
Okay, so if I'm
like on a basic level, right? We're looking at what the tickers are, what companies they are. So we have in here, matter of fact, it explains a lot, just straight to the point. But there's other things that when we look at this speaks more to you when it comes to valuations, the financials, the ownership, and how to look at a stock and understand what its true value is. The performance of the stock, the technicals, we could go into that aspect, But right now, what we're gonna do. Oh, here's some other aspects that we could actually jump into that Mr. Business was actually talking about just a moment ago, where whether or not the 20 was over the 50, the 200, and so on and so forth. These little things that you see on the screen right now, when it comes to the percentages, these things actually add a great deal. The beta. That is another huge thing when it comes down to looking and understand whether or not a stock is volatile. So these things are what I'm actually trying to pull out of some of my people here. And they do it on this guy here. He's acting like he doesn't really do it on a regular basis, but he does it on a regular basis. He's very into it. When it comes to, I'm speaking of Mr. Business. And when it comes to Mr. Curtis, he ran a whole company when it comes down to doing stocks on Wall Street. So getting this information from people who've been doing it for a while, getting this information that somebody who's looking at it from a point of view of fresh eyes, these are the things that I'm looking to make sure that we deliver to everybody, so that they can get that great, well-rounded situation of learning how to build themselves into a great trader, but also build themselves into looking forward to the future. Because right now, universal basic income is going to be a reality. So back to you, Mr. Curtis. Let's. How do you actually see this screen when it comes down to the things that you're actually paying attention to?
Well, you just want to dumb it down for people. First of all, I would want to break these. Let's see. So you have 20 something stocks here. I would want to break them up.
I'm sorry.
Somebody said something. I would want to break them down into sectors.
Oh, y'all sound choppy. I don't.
Oh, she's saying that we sound choppy on the.
Choppy.
Let me see. As a
You
matter
weren't
of fact,
sounding.
you sound choppy. Well, we actually, Curtis, you sound good. So
You weren't
it might
sounding
be her.
choppy. Yeah, it might be your connection or something. Yeah, because you weren't sounding choppy at all to me. So.
All right, go ahead and into the that was her.
Okay,
Well,
so I
back
would
in.
want to break those down into sectors, group them into sectors, and after you group them into sectors, it doesn't matter how what group goes first or last, and then within each sector, I would want to look at the volume first, the largest volume to smallest volume, and then percentage change. I want to look at the percentage change. I think those things are the most important things, because those are basic things that people can follow. You don't want to get too technical whenever you're talking about stuff and trying to let people know when they're learning something from the beginning. So sectors, and Mr. Business was talking about, okay, things are cyclical. Certain sectors move different times of the year, and you move those times of the year all the time.
It's funny that you said that, because we were just talking about this, and one of the things that we'll be talking about this probably at a later episode, but one of the things that I was thinking about is how to get the calendar for that particular type of situation when you're looking at stocks, or at least preparing for the next sector or the next season to happen, with how to prepare for the next quarter, because each quarter has different things happening. So how do we prepare for holiday season? How do we prepare for summertime? How do we prepare for the fall? And each and every season brings a different aspect. So how do we prepare for it when it comes down to looking at those type of calendars? So it's funny that you brought that up almost like immediately. But go ahead. I'm sorry to cut you off.
Yeah. So sectors, volume, percentage change. I think those are the most important things. Mr. Business referenced swing trading. Identify what are you going to look at? What trends are you going to follow? Are you going to? I don't necessarily recommend people try to focus on short-term trends, because you're not going to. The best things to really follow are intermediate and shorter, long-term trends. Short-term trends is just, if you're not building a black box and you're not, you're not doing algorithmic trading, you're not gonna. It makes no sense. Day trading is dead. if you're not, unless you are building a system. So this is not the time where we had market makers and, we're going against market makers and specialists. That it doesn't work that way anymore. It's all computerized. So that's what makes sense. And then on a lower, and then also dumbing it down, you need to understand macroeconomics and micro. What these companies do, how it affects the economy.
Let's go a little bit into that. Like the first part, like something very simple about micro and macroeconomics, right? What is one of the things that we need to pay attention to when it comes to looking into those particular things?
Understand the business cycle. Understand how the economy moves. What affects the economy? How it affects it on a macro, meaning large scale, and then on the micro level, more at the granular level. So when people say, "Oh, I need to drill down on this," that's micro. So, but macro, of course, first. And if you don't understand the economy, you really shouldn't be trying to invest in, try to trade anything. Before you open up account, before you fund your account, before you hit a buy or a sell, you need to understand macroeconomics.
You know what's funny? So you saying that, a lot of people really don't know how the world works in the first place. So that's interesting that you bring that up in a way. Right now we're displaying like one of the algorithms that we're actually building to be able to trade on Webull. So just showing that, just looking at this type of situation, it's possible that anyone can quite possibly do some of the things that he's talking about in just a simple amount of code. Nothing like 1,000 lines, but up to about 200 lines could get you into the market and trading algorithmically. I just wanted to show that so that you guys can actually see something like that out there. But go ahead, Mr. Curtis. Continue on.
I just, you have to have some type of foundation. I mean, think about it. How do you build a house? You start with building the foundation first. So attain your knowledge, through, understanding the micro level, global economy, how the other economies affect ours, which you'll learn in macro, and then start watching the market movements, the swings in the market, start correlating that with the news. Everything is news driven. Now, how does the market move?
See, that's funny because like when the first time I was ever interested in stock, it was I walked into a room seeing one of my great uncles looking at CNN at that time. I think it was. They used to put a ticker like just what you're seeing on the screen right now. CNN used to put a ticker at the bottom of the screen, and you would see pretty much all of the signs and the symbols and the tickers just scroll across the screen, and I used to wonder what he was looking at. And that very thing right there is what piqued my interest in getting into trading, or at least into understanding what the stock market was doing and why was it doing it and how people was making money in it. So when it comes down to the basics, right? Because right there, I feel like we just went through pretty much a clinic of understanding what it is to look into trading. What is it that, look back to the beginning parts of when you first started thinking about getting into trading? What were those things that you felt like were like almost foreign to you until you had to till you found like you actually understood what it was that you were looking at?
It was never foreign to me. I was taught this when I was younger. There was things that I wasn't exposed to on the inside because, I was an outsider when I got to Wall Street. So for example, there's a book called How to Make Money in Stocks. William O'Neill system. They made us read that. And the reason why is because have something to base something off of. Just allows you take a deep dive, understand, look at balance sheets, look at companies' values, things of that nature, fundamentals. And then you can then I dove, after I learned fundamentals, I just dove into charts, okay? What kind of, moving averages, all the technicals. Because at the end of the day, what are stocks? They're price patterns. All that matters is the numbers. Who gives a shit what a company does? I mean, you don't really, if you're investing, yeah, we're not investing. We're trying to trade. So I don't give a fuck if you make, what kind of widgets you make or you sell. All I care about are price trends and what direction they're going in. So that's, but have a foundation, know what direction you want to take, because, there are traders that do believe in, okay, fundamentally, what is it saying? What's your strategy? Come up, you got to figure out what is your strategy?
Now, in thinking about what, like, segueing off of what is your strategy, have you been paying attention to, because I know you got all these businesses that you actually help with running right now, so you might be a little bit busy, but in doing the stuff that you're doing, have you been paying attention to the situation with MetaVerse and AMD?
Briefly. I'm not well versed in it because I have companies I have to run.
Yeah, exactly. That's why I was like seeing if you were already dealing with it. So I'll give a little brief of what I know about the situation, and is that with AMD, they partnered up with Meta because as of right now, when it comes to chips, there's a global shortage in chips. First off.
Yep.
But on top of it being a global shortage in chips, one of the main things when it comes to AMD is they were super heavy into the gaming aspects when it came to their chips being into the graphics cards when it came to gaming. So the metaverse is pretty much going to be a big, huge universe that is a huge game universe. So who better to get with them than to get with Intel, who wasn't really doing that particular thing, or let's say a DuPont or anybody else who's into making chips. So they partnered up with Meta, and their stock just started shooting up as of recent for the last couple of days, because it just shot up to about $15 from what it was just a couple of days ago. So as a matter of fact, let's go ahead and pull that up. So in hearing that information, what would you gather from that? If you need more information, I'm going to go ahead and pull that up as well when it comes to AMD. But what would you think of that in looking at that situation? Now, I know I'm hitting you with this on the fly, but if it's on purpose.
Just off the top of my head, if knowing that there's a chip shortage across the board, there's going to continue to be one. I'm going to look at what's the volume, average daily volume. I want to look at the charts. What's the yearly look like? What's the daily? 1, 3, 5 year, but more importantly, what's the daily look like? Look at some weekly charts also, but I mean, you definitely would want to. This is definitely something you want to be long, and this is something. This definitely is going to could be a long-term play, because with the chip shortage that we have now and going forward, it's going to continue to keep. It's going to stay that way for the unforeseeable future, because that's part of the pandemic that we're going through. So this company is going to profit from this big time. So you definitely want to be long this shit. I mean, you can be in and out of it based on how the market's moving, but you definitely want to be long this for the foreseeable future. Look at that.
Let's go ahead and shoot this guy at let's say 1 month. Now, within the last month, this company has risen in price, and it's mostly been, like he said earlier, because of news-driven events. So pretty much right now, We're on TradingView. Make sure that everybody can see this. All right, there we go. So we're on TradingView. The news-driven event that we had up there, well, that was the earnings. And we also had a news. Where is that news-driven event? When did it happen? Okay.
I see that massive spike in the volume right there. There you go.
Yeah. So a super amount of volume went into this. Go ahead and read that.
All right. Well, so this is off protocol.com. Don't really follow this website too much, but they have an article saying Meta will use AMD chips power the MetaVerse. And this came out November 8th. So the news came out a little bit early and kind of rallied everybody up, I guess, going up. Yep. So
there we go right there with the whole November 8th aspect.
So let's throw in the numbers. Meta Finance Chief David Weiner has said the company has plans for $29 billion to $34 billion in capital spending next year, up from an estimated $19 billion this year. So that probably that includes data centers, which is, let's see if I can pull the numbers again.
They're increasing their exposure.
Behind AWS, Microsoft's Azure, and Google Cloud, Meta runs a fourth largest data center operation in the U.S. And with the scaling coming up, they're going to be looking at an increase of, looks like...
So if they're increasing their spending, their revenue is going to be increasing substantially.
Yes.
So this is definitely a long-term play.
Yes.
Now, with that being said,
I mean, in the short term, sorry to cut you off. I mean, look, if you just go back, when was it $120?
When was it 120?
Yeah.
It was 120 around the November 1st.
Now look at that. And it ran up to what, 152?
I'm seeing
it spiked at 153.
Look, just
around the 8th, actually.
Look.
Oh, on the day of the announcement, actually.
So
it looks like they actually said it over the weekend too. So they said something. Where is this? So they said something over the weekend, and then so that's funny that we noticed that part right now too. They did this over the weekend, getting themselves time to prepare for the move that was going to happen, and then the nighttime move just before, or what do they call it? The
pre-market.
The pre-market move jumped up crazy, and then right that morning it was a big gap up for all the way until like 9 o'clock. 9 o'clock at 8 a.m. I mean, sorry, on 9 o'clock a.m. on the 8th, it just shot up. It's a lot of people who took advantage of that. If you weren't paying attention to the news, go ahead. I'm sorry to cut you off.
No, I'm just saying, just that move right there, and then you could look. Let's just say you had 1,000 shares of that. You could have took 500 of it off the table, and just keep the other 500 and just because what it is you had that big spike right off news-driven event. It settled down, and then now look, it's going back up. So the reason why I said take $500, 500 shares off the table, because pay yourself, reward yourself, and take those profits and put it into something else, and stay in that position, because it's going to continue to keep going and going.
See, I want you to make sure that you actually say more about the mindset of what you just said a moment ago. You said reward yourself.
Well, I mean, so think about it. People, look, I don't have a job, but majority of people in the world have a job. You get paychecks, right? What's the first thing they do? And forget about paying bills, because everyone has to pay bills. You should reward yourself. Okay, whether it be go out. People they celebrate. You go out to drinks, they go eat dinner, this and that. But monetarily, you should reward yourself. That's what when you're trading. Your reward is your validation in your analysis is I was right, so I need to pay myself.
Gotcha.
Don't necessarily pay yourself in cash out, meaning take withdrawal money from your account, but take some profits off the table, and you can take that money and put into another idea, and have sell rules. So say, for example, maybe you have 10% sell rule. Okay, I'm just throwing that number out there. It doesn't mean you should have a 10%. You know, I would recommend it be smaller, but because think about it, if you have 10% sell rule and you lose 10, the next one, remember you lose 10% on one to break even, you got to make 20% on the next one. So, but have sell rules. If this trade starts going against me, whether you're short or you're long, don't sit in it. Don't marry your positions. All right. At some point, I got to cut my losses and run.
Don't marry your positions. I think that's a
that comes directly from Wall Street. I mean, you could end up being right, but you might be wrong for that moment. Don't get emotional about a trade. Okay.
So how do you keep yourself out of a situation where you're in a situation? Well, how do you keep yourself out of the situation of being emotional about a trade? Like, how do you set those rules? So, for instance, what are your rules when you're thinking about making a trade? What are the guidelines that you follow to keep yourself from being emotional about a trade?
As long as you at the end of the day, did you put all the work into it? You have enough information? Do I know enough? More importantly, when I traded currencies and commodities, my thing was the Japanese yen. I knew the Japanese yen like the back of my hand. All right, the dollar yen. I knew how it reacted. I knew the average daily, volume. I could tell you what the volume is, an hour into the day, 2 hours into the day, 3 hours. Something's going on. I know it's how it's going to spike based off of what news, and then it's going to shake you out. It's going to settle back in, all that stuff. So know what you're putting your money behind. Do your analysis.
You said so much in that one statement alone. It's going to shake you out. It's going when I tell you, like, we got to go over every single little piece of all the stuff that we're talking about. Because to be honest with you, the stuff you talk about is at such a high level. The basic person is going to listen to this and be like, what in the hell is he saying? Shake you out? What they going to rob you? They going to take stuff out your pockets? Like, you got any rabbit ears? No, but pretty much they are doing that. They're literally going to shake you out. And in doing so, they're going to rob you because you probably got like some type of stop loss that's set up where you want, to take your profits at a certain point. Yep. And they know what your stop loss is because you're probably following the conventional mindset and setting it at the conventional situation.
Parameters. So, and sometimes and piggybacking on what you said, sometimes you don't want to use a stop loss because how volatile or how it reacts based on news and special events, it might not necessarily be best to use a stop loss because what happens, you get shaken out and then, damn, you're totally out of the trade. You want to get back in and it's still going the same direction that you want it to go. And what all the analysis tell you is going to go, but you got shaken out. So you have, that's another reason of doing your analysis and understanding what you're trading and how it moves. Mr. Business, he talked about volume. Volume is everything. Understand the volume. That volume and price trends are correlated.
So, just the other day, they shook me out on SHIB. So, I was at 4888, but before it was 488, they traded, 0.000048888. I was actually trading it at 5.2, but this is one of the things you need to pay attention to if you're actually trying to trade and you're using these services like Webull or Robinhood. They give you a delayed entry and exit. And that delayed entry and exit, that's where they make, those cents is where they make their money. So pretty much, I don't want to say it in a bad way. It is considered a negative, but when it comes down to it, like sometimes you will be shaken out just off the rip of the way that the trade is happening, and then on top of it, the way that the system is trying to find those places where people are pretty much setting their stop losses, setting their trades to get out of a trade if, like, just in case you wanted to get out of a particular trade. So anyway, what he was talking about a minute ago was they shook the person out, but then you want to get back in. And this is the example that I was trying to show you. So I was about at 5.2. So I noticed that that the price was going down around 5.2. So when I tried to get out of the trade, because I wanted to keep as much profit as possible, wait until it went down, and then I was going to buy back in. But instead of them selling at the point where I was trying to sell at, because of the 15-minute delay that I was telling you about with Webull and all these other, let's say, guerrilla. What do they call them? They call them monkey. What is it? Dumb money? Ape. There we go. Ape apps. So most likely, Mr. Curtis, what type of app would you be on if you're actually doing real trades?
You
Like
want to look
interact-
at you want to go to some type of brokerage house and use their platforms. You don't want to use any of this stuff. You want real time data, real time price information. That you don't. This is not for people who. This is not real traders. Don't use that stuff.
So it'll be like TD Ameritrade, Interactive
Yes,
Brokers.
correct. Yep.
Yeah.
Yep.
Okay.
It could be with J.P. Morgan Chase. They have their own trading Citigroup, but you don't want to use none of these. Those things are terrible.
Yeah, exactly. So at night, it went down to about 4.8, right? Let's see to the bottom of this one. Actually, it went all the way down to about 4.5. Okay, so when I saw that it sold me out at 4.888, and I tried to jump back in because I noticed that it was about to go back up, and I was looking at the trend. I was like, okay, it's gonna come back, it's gonna revive. And as a matter of fact, I shouldn't have really jumped out because I already know that with this particular type of investment, right now they're looking and waiting for everybody to start forgetting about what's going on with the cryptocurrencies and everything right now. So it was like a big lull of let's say news that came out, and they were talking about SHIB, and then what's that guy Elon Musk was talking about SHIB, and Shiba Inu. Let me make sure I say that right. So they were talking about Shiba Inu, and now there's a whole bunch of news that was pushing the cryptocurrency up, and because of that, now there's people who are pretty much pulling out their millions because they got in early. And that's what made the lull, or the pretty much the negative aspect, or the so you got the bulls and then you got the bears. You got this bear market going on right now, where it's or this bear trend going on. But really, all it's going to do is they're waiting people out, and then it's going to go back up secretly and quietly, like all the other daggone cryptocurrencies have done in the last few months. Every single one of them, when the news happens, all of a sudden the stock goes down. And then as soon as the news disappears and they start talking about something else, it shoots right back up the next week or the next month when people start forgetting about it. So just making sure that y'all understand and know that part when it comes to this. Jumping back, though, going back to what he was talking about a moment ago, Mr. Curtis. So I got out at 888. That's what they put me out as, but really I actually made my purchase, or I made my sell earlier than that. But when I noticed that I wanted to get back in, I saw it was coming back up, bounced again, and then boom, like it sat right at what is that called? A resistance line. A support. So right at that support it's an old support. You'll see it later on. I'm not going to pull because it's going to be difficult to do it right now. But right at the support, it bounced right out back off that support. It looked like it was about to test it again, and then it shot right back up. And then once it went over that 20, I was like, yeah, definitely, I gotta get back in. So I left everything in, and everything's rising back up again. But we're using the cryptocurrency right now to say something. I'll talk about that when really we could look at another aspect, and that's looking at, say, for instance, the S&P 500. So when it comes to the basic person trying to get into trading and trying to get into a situation where they're looking at stocks, you should be looking at maybe two things: the S&P 500, because this takes on pretty much the whole gambit of the market and looks at the market. And if you're on the S&P 500, this is going to be advanced. Most likely, if any of these stocks are on the S&P 500, they have technicals and they got fundamentals that are great. That usually, if they're at the bottom, highly likely sooner or later they're going to get right back up to the middle or the top. So, investing in a stock that's on a S&P, or investing in a ETF like the S&P 500 pretty much points to you gaining. So let's just say, for instance, you've been like for the last year just investing in trading just the S&P 500, and you're just throwing money in there and you're just waiting on that money to grow. Literally, if you look at this chart right now, you're seeing growth. This is you investing in your future and not really having to worry about too much that's going on, because you have professional traders looking at this 24/7, and your money is going to be protected. Hopefully the whole market doesn't go down. Our country is not messed up in that way. Hopefully we don't get to that point, but if we do, that's the only way. Inflation is the only way that right now the S&P 500 would look like, let's say March 2000. That's the only way this is going to happen. A pandemic. That is what a pandemic looks like. That is what hyperinflation looks like. And we had it happen once before, but we're going to go back. Everybody who actually threw their money in right around here, because they understand what's the best way to start making money in the market, Mr. Curtis?
What, as far as what?
Buy low.
Oh, buy low, sell high. That is traditional thinking. People generally, buy on dips and stuff like that. But people don't generally short the market. I remember when I first started out as a stockbroker, and then I turned into a trader. I had clients that they thought it was, they said specifically it's un-American to short the market. I was like, okay, well, I'm going to make this money. It's stupid to be on one side of the market. You're not playing the game right. You need to be on both sides. When it's going down, you need to be short. When it's going up, you need to be long.
So I want both you and Mr. Business, since you just said what you said, I'm gonna throw it at Mr. Business real quick. Mr. Business, what is your explanation or understanding of shorting the market?
Well, shorting the markets, they're borrowing shares at the current price in hopes that, or betting against that, it's going to drop. So when it does drop into a certain point, let's just say, well, for their liking, for example, they'll buy back those shares at that lower discount price. So the difference between borrowing the shares and then buying at the low, that's their profit. So when you're playing both sides of the table, if you know that the economy or something, again, the pandemic, when things are going to be going down, or we have, knock on wood, a recession, depression, when that happens, play both sides of the table. Just like what Mr. Curtis was saying. Short it to know that it's going to be going down, just like everything else is going to be going down. Because why? The economy, the economics of it all, the high level and the low level is all going to be affected. So it'd be wise not to just hope and pray that your calls go up because you're waiting for something like GameStop to go rally up and spike up. That's once in a lifetime kind of thing. You play both sides of the table, because just like a pattern, it goes in waves, it goes ups and downs.
I don't even think we should even say GameStop.
I mean,
only because that was an artificial, up.
It was,
seriously.
but waiting for something to spike up that high, it's like trying to win a lottery ticket. It's better to be consistent each and every day versus just trying to win on one lucky day.
So, with that being said, Mr. Curtis,
Stop looking for home runs. Consistency is the key, like Mr. Business said. So small trades that are consistently you're right on. That's the way you make money. You're going to hit home runs every once in a while, but you're not going to hit them all the time. The key is is being consistent and taking those small little slices. Just boom. That's how you move forward.
Now, if you look at this chart, right, and listening to what the explanations of what they were saying, there's a thing called dollar cost averaging. So if you were just throwing $20 every month fractionally, because like the S&P 500 right now costs about $460, but at this point right here, let's say January 2017, it was only about $227. So if you were just investing in this type of situation over time, you kept buying the stock. Even though you bought it at, let's say, about 272, if you average it out, it was probably about let's say 220 from the averaging. And I'm just throwing a number out there because hopefully everybody who's even looking at this, they would know about averaging. Look, I'm in California, so and I'm in LA. Not a lot of people here think about this type of stuff, and they would, yeah. So anyway, back to the situation at hand. So over time, you would have been gaining, and even down to this point right here when it went where it just crashed out of nowhere. You see the volume just going crazy at this point right here. How much is the volume? Let's see what that is right now. That is about 1 billion.
That had to be some type of news event, something, because that's massive selling right there.
This massive sell-off was COVID.
Oh, okay. All right.
This was COVID. So when all this stuff and everybody was getting afraid about COVID and it was started locking down everything and people were so dying and stuff, this was February, March, COVID. This is the event that actually caused that particular drop off. But after that, look at how it rallied. It just went right back into the truthfully, you could erase this line right here. Everything to about from March to, well, I guess we're erasing a whole year, but everything from February.
No, never forget.
Everything from February all the way to August. Pretty much you could erase everything that happened in between there, and it's back into effect. And it was like nothing happened. Matter of fact, it was like Trump didn't lose.
Oh, God, don't.
Yeah, because the market has been going nothing but up.
If you look back to when Trump got into office, it's like a quick little, and then boom, right back up. So, and this was not supposed to happen. We should have been in a situation where hyperinflation should have been already happening since 2016. But
now we're there.
Yeah, now they can't pass it off. They really hate Biden. I swear to you, they couldn't wait until Kamala got in office. No, they just said, screw it. We're just going to hit Biden with this one. Because they saved Obama, they saved Trump, and they just said, hit this old white guy with this one. So pretty much, I guess it was due time. Yeah, but now we're at what, 6.3% in inflation at this point?
Correct. And
crazy.
Gonna keep going.
They said Janet Yellen said we were only going to get to about what, 5 maybe?
Yeah.
This is going to go to I can put you could take me to the bank on this one. We going up to about 13.
It's going to be ugly. People are going to get squeezed so bad. I feel it's a shame because I feel bad for people because this is not, it's going to affect all of us, but so when I go to the grocery store and go grocery shopping, I don't pick out groceries based on my budget because I don't have a budget. I go get what I want and put it in the basket and I go buy it. Mm-hmm. Majority of people in the world have a budget for everything they do. Yeah. So your let's just say your $150 in groceries is pretty much you're still going to be spending the $150, but you're going to be getting $100, and then next thing you know, you're going to be getting $75 worth of groceries, and then it's gonna hurt people that have families really bad.
Right now, I lived in Germany at the time when the Dutch mark changed to the euro.
Oh yeah.
And when that happened, things that were 50 cent turned to $1.
That right there will cripple the economy.
Mm-hmm.
Yep.
Things that were like $20 went to 50, you know, or $25 went to 50. Like everything doubled overnight. When you went to the bank the next day, the money that came out of the bank was different.
Yep.
Your money you had in the bank that day before did not matter. It just changed. And when I tell you, going on the economy as just a regular person, the thing that's gonna hurt the American public the most when it comes down to this particular thing is going to be gas. And it's going to hit them.
It's already.
It's going to hit them in so many different ways. Oil is going to hurt them. Gas to put in your car is going to hurt them. The way that we process things in this, I'm gonna say this world, but in this economy, it's going to cost. So a pin is going to go from $1.25 or $1.75, how much they cost right now, to pretty much like $5 overnight. Things that you're thinking about that you don't even think are like that much of a big deal is going to cost you. So a gallon of milk out here costs what, $5, $5.25? I don't even think about it. Like he said, like when I go to the store, I don't really have a budget. Usually I just throw $300 almost every time I go to the supermarket. But
you need to stop shopping at Whole Foods.
No, I'm just a big guy. But no, but at the same time, I gotta get my ceviche. But when you go there though, like that gallon of milk is gonna go and skyrocket from from $5 to $15. It's not because of the milk. It's because of everything else that comes along with it. The train that brings it to the truck, that brings it to the person who's being paid to be able to take it off the truck and put it into the stores. All that's going to cost.
And it's all being passed to the consumer. All those costs. Yep. So I mean, the goods are going up, but also the producing it is going to cost more money. So they pass that on to us. So, but it's going to cause a real separation in classes.
Oh, definitely, and that ever widening gap of the pretty much the upper middle class or the upper class to the middle class is going to pretty much stretch even further, because that one particular thing right there, when it comes to that jump from we could keep it at the price of 120, about 120. The gap between somebody who jumps up to 150 and above in comparison to 120 and below is huge. And the only thing that keeps it looking anywhere close are the mega cities like New York, Atlanta. LA, so
Chicago.
on and so forth. Those
Yeah.
places are the only places that average it out to making it seem as if the poor are right next to, or the middle class, not even the poor, the middle class are anywhere near the rich or the wealthy.
Yeah.
So that's going to be amazing because, for instance, I preach to a lot of people on how they should not really talk too much about their money, right? And the only reason why I say that is because a lot of people are hungry out here. And for instance, we had a situation recently that happened where Terrence J, remember that guy off 106 and Park? Right?
Yeah.
He just recently got attacked out here in LA. They supposedly they watched him come home, or they what is it called? I forgot what the news report said, but pretty much what they do is people who are up in those higher echelon type situations, they sit back and they watch them at a well, you know what, Mr. Business, could you go ahead and read that for us?
Yes. So
He pulled up the report.
This is from, of all sources, TMZ.
They would know.
I'm gonna skim a little bit. So, law enforcement sources tell TMZ the actor and TV host is pulling into his driveway in Sherman Oaks, and that is northwest of LA.
It's not really a gated area either.
Yeah.
When it comes to Sherman Oaks, because I was living in a gated community there, and they stole my car, everything. But but it's not too far away from a distressed area as well.
Yes.
Okay.
So, around 3 a.m., when another car pulled up with 4 black men inside, one of whom ordered Terrence out of his car. We're told he refused the command and took off in his car.
First off, Terrence, that was gangster. Because they probably had their guns out, like, get out the car. And Terrence was like, look, I could do bad on my own. What was the movie he was in with Taraji P. Henson?
Something like that. Yeah.
Think like a man. He thought like a man at that very moment, and he said, "Arr!" and drove off. So I give him applause for making sure he didn't get robbed in that situation. Because if he was Safari, and I like Safari, but Safari got done dirty out here in LA.
Oh,
Go ahead though.
All right, continue on. Took off in his car, and Terrence told the cops the suspects chased him and fired at his car before they fled. TMZ sources say Terrence, who hosts shows on BET and MTV, then flagged down a passing California Highway Patrol car who called the LAPD. Cops took a report for assault with a deadly weapon with shots fired. Unfortunately, police are still investigating. So he better have some bodyguards or better security systems in place after this. I don't know.
For real. Or carry a gun like me.
Definitely take a different way home. Don't have a usual route. People follow you.
Yeah, they do.
See, I don't even think it's just that now. People fail to remember the situations that happened in the past. For instance, Marie Antoinette. If y'all remember that story, Mr. Curtis, you remember that story?
I don't remember it.
Okay.
Talking about French Revolution?
Yes, exactly. Let them eat cake, lady. So pretty much the aristocrats at that time, they were living well, they were doing their thing, and the economy fell from up under them because of the decisions that were made by the aristocrats at that time. And a large part of the situation that was negative about this was that they had a disconnect between them and the commoner, and those people pretty much lost their heads because of it. Right now, we're about to be in a situation.
We're already in it.
Yeah, this is my tinfoil hat. Anybody who knows me and who's known me from years ago, let's just say 2007. If you knew me and you asked me, because we used to play this game in the military called "What is your zombie apocalypse?" Right? And everybody had their situations, the fault happening, the situation of the San Andreas fault, or like let's say a tsunami or a hurricane. Mine's has always been economic decline, financial decay of America. I always said that because I saw what happened in Kosovo when I was out there, and when I saw that, I was like, holy crap, this is a zombie apocalypse. So for this to actually happen in America, I don't want to say I called it, because I didn't really call it. I just said this would be the scariest thing in the world to me, because if this happens in America the way it happened in Russia, the way it happened in Germany, the way it happened in Kosovo, the way it happened in Greece, because man, did you see what happened in Greece? You had doctors turning into daggone girls who worked at the red light district. If you know what the red light district is, it's a very, very seedy place.
Yeah.
That you could get top. So so you had doctors selling themselves for $25. So anyway, mine has always been the economic decline. And if that economic decline happens, the most trusting people who you've ever met will turn into savages just for a can of beans.
Yeah. Well,
If they think you got food in your house, you are a murder. You are a murder victim.
yeah.
That's what's about to happen if we don't get this under control. Universal basic income won't be a lot. They were preparing us for that particular part in that situation with the aspect of giving people the money that they've been given right now, because they got the poor conditioned into getting this $4,000 a month.
Look at inflation. We talked about inflation, right?
Mm-hmm.
It's already 6.2, 3, 4, 5, right in that range, right? It's going to get worse. Remember we talked about, okay, and, you know, the relationships with men, women, and, you know, now that right there, it's hitting these women. They can no longer, they need an extra, they need someone else. So
all of the
just
majority
that one
of the
thing.
jobs that women hold, right? And if you look at the bottom, look at the inflation indexes that are down there. You can look into those guys, make a little bit of money off of that when we start to decline. Make sure you look at the VIX, VIX or VIX. I think it's
Volatility
VIX, right?
Yep, it's
Yeah.
a VIX. Yep.
So when the VIX, for instance, if you look at the VIX, what'll happen is, let me make sure I put that in there with that too. What'll happen is you'll see the market start to decline, and the VIX will shoot the heck up. Matter of fact, I'll pull that up here first. The market will shoot up, and I think it's VIX or VIX. Let's see, VIX. Yep, there we go. X. So you know what's funny? Just pulled up, and right here is March. Now, if you look at the comparison of the last one we were looking at, it was high, building up, and then it shot down. Well, right where it shot down, see that? March 9th, March 8th, February 24th, boom, boom, boom. Right in that area is when the VIX started shooting up. So if you're looking to invest in, or no, let me rephrase that. If you're looking to make a trade during a time when we're doing a economic downcline or some type of situation where it's a news event where like majorly the S&P 500 goes down, make sure that you have your, let's say your alerts ready for buying the VIX, because that'll be a educational thing that I'm telling you right now. That'll be a great trade that you can make, that you can make at that time and make a little bit of money while everybody else is suffering. Anyway,
Zero-sum game.
Mm-hmm. So let's go back to the S&P 500 so y'all can see that part as well. Right there. So when it rose in for March, and with the VIX, it fell in March and February for the S&P 500.
So they have inverse relationships. Real quick, what he's explaining.
Yeah,
so
go
if
ahead.
the VIX shoots up like that, that's not good for us. So we want to be on the opposite end, meaning shorting.
Mm-hmm.
Or if you're not shorting, buying options, buying puts.
Now, what a short is, because we've said this a few times, but we haven't explained what a short is exactly. Just for the, because
Mr. Business explained it.
He did again. The expectation of
the
stock
price
going
drop.
down?
Yeah, the stock going down, so they cover their shorts, buying low to pay back the ones that they borrowed on the high.
So what I'm gonna attempt to do is I'm gonna turn this into a hood explanation real quick, because what I do realize is I was looking at some great other YouTubers, and one of the things that I was looking at was these guys called Earn Your Leisure, and this one guy named the Wall Street Trapper. And,
yeah, I saw that. You sent me something about that. Yeah, they break it down into. I sorry to cut you off. I don't really like that because they break it down into, you know, like you're standing on the corner and you're talking. We're not on the corner and we're not talking about shit on the corner. But this is real stuff. This is stuff you need to take very seriously. So my thing is, if you take a lackadaisical approach and you don't articulate it properly, how do you expect to be serious?
And I fully understand, because like right now we've been at a high level for a majority of the conversation, but the thing about it is this: each and every one of us who are in this particular situation knows if we go back home, highly likely we'll be speaking another language in a way. We'll be speaking another dialect, or we'll be speaking another layman type terms towards some of the people that we're talking to when we're back home, right? Because you're in Atlanta, but you're not in New York. Mr. Business is in LA, but not in Atlanta, and I'm in LA, but not in New York. So one of the things that we have to make sure that we understand too is the layman does not understand anything that we're saying usually, right? So for instance, the way that Wall Street Trapper breaks it down is not for someone like us.
Oh, absolutely isn't.
It's for someone like that person that we know from back home or something like that, that never left that 4 square miles.
Yep.
For that person that was on the corner, that was dreaming about a way of getting out or getting away from that corner and going to the suburbs. So
Right.
him saying, for instance, getting a small cap type of stock is like a young boy, like a young boy, one of these young boy rappers or something like that. Little baby, Infa baby,
Yeah, he lost me.
Infamil.
Yeah,
Like
he
the way
lost
he,
me.
yeah, like the way. So say for instance, getting a Tesla is like is like looking at a young baby and stuff, like young baby, whatever the hell they name is.
The baby.
I feel so bad right now. Like I feel like I just made myself feel old, but still, like, and once I actually started listening to it, I understood where he was going with this. So what I want to do is also make it accessible for the layman, because what we want to do is we want to make sure that we educate, not just because if we're speaking to the choir, what does it matter?
Right. No. That's why I explain Global Macro Fund. I think Mr. Business does a good job of explaining things. But by all means, I will never, I don't come from the block. I don't know shit about the block. So I can't even fathom what they're talking about.
Oh yeah. That
So,
to be honest with you, that isn't your job here.
yeah,
Because
definitely is.
you are at that higher level. So to be able to speak that level on that higher level term and all the stuff that comes in that's associated with it is perfectly fine.
I'm going to point you in the direction of, what's good books to read? The books about the dummies books. They dumb it down and not in a derogatory term, but they make it, I would say, simple, stupid.
And
So-
you know what's funny about that? I looked at those, and to be totally honest with you, I hated them. I hated it. It was like I could not get through the book. I had to literally buy like a few more other books to get an understanding, because they tried to break it down, but it was so mundane.
It's very, very, yes, it is.
and
But it needs to be that way for majority of people out here. And not even the majority, the mass, the bulk of people, it has to be that way.
Wow. So I just suffered it. We had a drop because we didn't actually get to her segment. Let's see.
You can send her a message. Tell her we're there. It's
My bad.
It's late.
Okay,
It's
there
late
she
on the East Coast for me. I got to get up and do
You know
business
what?
in the morning.
Oh yeah, we are at the
We
present
at-
time.
Correct.
Where we are over an hour. Wow. That part wasn't expected. I thought we was gonna do like a 30-minute quick little basic segment. So one of the things that we'll do next time,
We'll take Mr. Business advice.
we will
Segment.
sketch out this one a little bit better, because I really want to get to the basics.
And I love you for that, Mr. Business, because I was saying that before also.
Well, I feel like when it comes to some of the other stuff that we're talking about, I want to get a organic situation going with the conversations. But when it comes to this, you're absolutely right. I will concede that I was wrong. When it comes down to being more organic with this one, I feel like we need to structure this a little bit more so that we can explain the basics. Because every time we
can go down a rabbit
into
hole with this stuff, man.
Yeah, exactly. And we started going right back up to the more esoteric, the more technical aspects. And I appreciate the education and the expertise that we have, but we do need to speak to the lowers because of what's about to happen. Wow, I said lowers. I apologize for that. I don't mean that in a derogatory way.
I'll clean it up for you, the people that have the less knowledge of this area of expertise.
Yes. So what I will say is we are going to break off this segment, and if you want to join us in the other aspect or the other conversation, because we're going to jump away from Mr. Curtis and we're going to go to another. Oh, wait, she dropped right back off.
Oh.
Yeah, we spent too much time on the
about to pass the mic, and she
dipped out as soon as we were about to pass the mic. So this is,
I think she's back on
episode 2.
No, not bad.
This is episode 2. We of FireNation Radio. I appreciate everybody who actually participated. We will be bringing you that good content. We will be building our stage up, building our ability to make sure that we translate everything to you guys in a proper form, to make sure that we give you the best information that you could possibly receive, and not stumble over your words as you're saying it. But go ahead. What was that?
No, I'm just saying, stumbling your words and just tripping, fumbling, just all over the place. So.
Yeah, exactly. But what I want to make sure that we actually understand is this: we need to come together. We need to find a way to be able to not only give, teach, but teach to fish. Right now, there's going to be a major global situation happening. And if the rest of y'all aren't prepared, you need to team up. Because if you do not team up, you will be a victim.
Absolutely.
Go ahead, everybody. If you want to say your outro.
So thanks for listening, and I hope we covered some basis of what people were kind of wondering about stock trading, because crypto is getting hot right now. But do your due diligence. Just don't jump in there and throw some money and think something's going to change up for you. It's a system that's made to work against you, because the bigger players' hands have advantage.
Ship it to the moon. All right, Mr. Curtis.
No, I'm just piggyback off to what Mr. Business said. Build a foundation, understand what you're dealing with, and the game is rigged 100%. So that's key with gathering all the analysis and as much information as possible.
All right. Nina, you could go ahead and say your piece, but we're going to see you on the next episode anyway.
Okay, because I was practically useless on this topic, but I found out a lot of information, got really useful. I got questions, but yeah.
Oh, yeah.
I just want to know, how many times did you fall asleep?
That's a lot.
But here's the thing, you guys. Matter of fact, on the next segment, we could go into that, but I want to make sure that we close this off for Mr. Curtis, because he is a major co-host on this particular segment. So I want to close this one off, and we're going to say, FireNation Radio, we actually want to give you the best content that we can, and we're going to get better and better each and every time we do this. So right now, this is Lightbearer speaking to y'all, and we out. Holla.